Alexa here, operations manager over here at the BPM RIA office, stands for Broward, Palm Beach, Miami Real Estate Investors Association. I'm so glad to have you guys in this webinar today. We're going to get into it with Sharif Medawar. We're going to get into the Ultimate Asset Protection Workshop, and you guys are in the right place. The only local chapter in South Florida that's partnered with the National Real Estate Investors Association. You guys are going to learn so much today. I'm so excited for you guys. But first, I'm going to give you all just a couple quick upcoming announcements, upcoming events. As you guys will notice, I will be popping some helpful links in the chat for you all today. So keep your eyes on the chat box because I'm going to be throwing some stuff in there for you guys. So as you can see, we are starting this month of December off strong because, of course, everyone's going to get really busy with the holidays. So take note of all these upcoming events that we have. We did add that webinar with National RIA tomorrow. A lot of you guys have been texting in, emailing me with what you want us to talk about. A lot of you guys were looking for a market update, some trends, what happened this year, what we can look forward to. So go ahead and register for that webinar that I posted yesterday with the National RIA. We're going to do a 2022 recap, going to talk about the future with the executive director of National RIA, Rebecca. So go ahead and register yourself for that. The link is in the chat for all of our upcoming events. We're going to have the Realty Medics back next week. We also have our monthly meeting on Zoom next week. So go ahead and register for all of these free webinars, guys. No excuses. They're free. I want to see you guys there. I'm going to miss you until we meet again in January. So go ahead, take a screenshot, go check out the website and register for all these free webinars. We have Jose Ramirez coming back, Advanced Tax Advisors. We also have REI Black Book coming back, going to start this year off right, guys. So go ahead and register for those. Link is in the chat. So as I always say, it's my favorite way to keep up with events. I don't know about you guys, but I love to get the text updates. You get a text straight from your phone as you did this morning, reminding you of our webinar today. All you have to do is text the word BPM REIA, no spaces, to our event update line. It is 954-800-6961. Don't call me, guys, on this number because you're not going to get to me. This is just for event updates and raffles and such. So I dropped that in the chat for you guys, so you guys can go ahead and do that or take a quick picture and do that later on. But I'm going to keep on going. So check out the chat if you missed it, and just go ahead and opt in for text because it's so much easier. Alrighty, quick start. It is coming around the corner, guys. So if you are interested in getting a coach, if you're interested in learning more about wholesaling with us, we also touch on rehabbing and flipping in this 2-day full day training. It's going to be Saturday and Sunday, January 21st and 22nd, 9 a.m. to 5. You will receive an itinerary. You'll receive a booklet to keep for life. As you can see, we're getting into a lot of topics. I went ahead and dropped the link in the chat for you guys, so you can go ahead and register for that, find more information about the topics we cover. You can find more information about the speakers that will be on that training, everything about them, the businesses they own, who they are. So go ahead and check the link in the chat for more information on the quick start. We do have member and non-member pricing. This training is going to be more interactive than a webinar because it'll be in a meeting setting. So we're going to do cameras on, mics on. You're going to be networking with the other people in the training. It's really awesome. If you have more questions, you will all have my contact information by the end of this webinar. So I'll be looking out for your questions on that. I'm more than happy to help with that. As you guys know, our members get all the goodies. They get all the discounts. They get the National RIA discount package, which includes discounts to Home Depot, Office Depot Business, Arcana Insurance, which is now MSI, Rent Perfect, so many vendors. So if you're interested in being a member and getting discounts or in free for our networking meetings, go ahead and check out the link in the chat. And again, you guys can send me an email if you have any questions about this, because we get so many great things from being a member, especially from National RIA. All righty, guys, moving right along. One-on-one coaching and mentoring. As many of you know, we do offer one-on-one coaching and mentoring here at BPM RIA. It is a truly one-on-one coaching program. If you have any questions, if you want more information about what's included in the program, we actually have a discovery call link straight on the website that you can book a call with me. I can get you the brochure and more information in your hands. I can also help with scheduling this 1 hour free consultation with a mentor. So do not hesitate to go ahead and book that discovery call. It's just the easiest way for us to get together at a time that works for both of us. This is my direct line here at the bottom. You can call or text me on this number. But of course, the discovery call is going to be your best way to book that call with me. So we make sure that we have the time available for both of us. So always want to take a minute to thank the National RIA, thank everybody for being in this webinar right now. Thank you, Anish, for allowing us to even make all of this happen. Thank you, Sharif, so much for being here, and his teammate, Ashley. Gosh, you guys are awesome. So I am just really excited to get started here. But as you guys know, quick housekeeping rules, not rules, but if you have questions, you want to put those in the Q&A box on the bottom or wherever your Zoom menu is. Get your questions in the Q&A box so we don't miss them in the chat. So without further ado, Sharif, thank you so much for being here. If you guys don't already know, because I've been talking about this for a while, Sharif is very, very good friends with Anish. They've been friends for a long time now. Anish looks up to him so much. I'm going to let him introduce himself, but just know that Sharif is definitely somebody very special to us here at BPM RIA. So whatever questions you guys have about what we're talking about today, let's ask them, because it's not every day that you get to spend this much time with somebody that's so knowledgeable and so supportive as Sharif. So I'm just going to cut myself off here. Myself now, and yeah, you guys will get your questions answered. Ashley says we'll do questions at the end, so make sure you get those questions in the Q&A box so we don't miss them in the chat. All right.
Thank you, Alexa. Hello, everyone. Sharif Merawar here. And yes, I've known Anish for a long time. We've done events together. I was invited a couple times to go and speak at your events. So really, it's a lot of fun for me to cover today the ultimate asset protection structure. Now, I'm sure you've heard many types of asset protection structures, and you probably heard from attorneys. I'm not an attorney. I'm not a CPA. I have in-house attorneys for me. I hold a lot of commercial real estate mixed use. I do a lot of high-end residential luxury homes in San Francisco. I'm a real estate fund manager. I've been teaching how to set up your own real estate funds for over 12 years. And have done very well with real estate, thank God. So I have the privilege to speak to you today. I'm sitting, by the way, here in Los Angeles, and it's a little gloomy this morning. So it's not this is a real backyard here. This is my sister's home, it's not mine. So I'm sitting outside, so it will be quiet. It's too early and some people are still sleeping in the house. So again, I will share with you how I have structured, and we've structured hundreds of our students and my education company with the same structure that is extremely powerful, and you be the judge at the end. And basically, my main focus is on the real estate fund. The fund owns properties in San Francisco. We buy and rehab luxury homes. We've done smaller end homes like in Ohio, but also we do mixed use commercial all the way into even Old San Juan, Puerto Rico, which is one of my favorite locations because of the steadiness of the market there. But no matter where you are, You want to look at how to protect yourself because lawsuits can come from anywhere. And these are a couple of websites that we have. I wrote a book called Blue Ocean Opportunities in Commercial Real Estate. You can see it on Amazon. It's like $2. It's not even like we just literally give it away. Amazon does not let us do it for free for some reason. So we do it at $1.99. Anybody interested to see how I started from really basically wanting to be in real estate to finding a mentor, a billionaire that I worked for, all the way to making my own millions of dollars in the business, which is kind of, you do it incrementally and then you get to the bigger game. I was privileged to co-author a book with Steve Forbes, which was actually, I thought it was a joke when they called me from New York. And sure enough, it was real. And the book is called Successonomics. I only have a part of it. The rest is him and some other people. But the key thing is everybody want to become secure, want to be rich, and want to be free. But you can't become the three unless you do three things. Number one, you have to have what's called productive assets. Productive assets, a productive asset is an asset that brings you income. Like if you buy art and you put it aside, that's not a productive asset. If you buy stocks in a company that don't pay dividend, that's not a productive asset. You're just hoping that the value of that art or the stock increases. But we like productive assets because they produce income. That's why we focus on real estate. That's why we're all in it. And next thing, if you have a productive asset, you have to learn how to control expenses, including taxes. And I just heard from Alexa that you have some people talk about taxes. I personally took residence in Puerto Rico, even though I do business all over the place in the US, and I'm originally from California. I found that Puerto Rico has tax incentives. It's a US territory. It dropped my taxes. It's a great place to live. It's warm, etc. I wouldn't be wearing this sweater if I was sitting in Puerto Rico this morning. And by the way, I'm going this afternoon to Puerto Rico. But the third thing is, well, now that you have income and you have controlled expenses, the third thing is you want to be able to have asset protection, because you will be amazed. If you're worth $1 million, you'll have $1 million problems. But if you're worth 10 million, you have $10 million worth of problems, etc. And as the market gets tougher or as things change, people want to sue you. And at the end of the day, you want to pass on to your loved ones what you have. So you have to protect them and you have to know how to pass them on. This is on Cristo Street in Old San Juan, Puerto Rico. I own practically all the buildings on the right side here and quite a few across the street. These are commercial mixed use. And what I do is I have the income. I bring big tenants down there. Like in that blue building here, I have Sunglass Hut now. Here I had Puma. Now we have Fat Tuesdays. I look for big national tenants that sign leases, and I actually do the asset protection program that I'm going to share with you. So basically, we have a website, KMAGB, those initials. It's called kissmyassetsgoodbye.com. I chose that name so people can remember it always, and it's kind of a funny name. But the key thing here is I wanted to find or create something that is easy to set up, easy to use, modify as in change, add properties to it, etc., and unwind if I want to cancel it completely. And when I would do seminar events and I would go on the platform and speak, to my surprise, I would share the platform with attorneys that would come up and pitch, if you will, and present asset protections. And what they would say is set up, you have 3 properties and your home, set up different LLCs. Limited liability company for your home, limited liability company for your investment property 1, investment property 2, investment property 3. And if you have a business, set up a 4th LLC. And then they would tell you, okay, pay us $15,000 or $30,000, or buy this box for $5,000 and it has everything you can set up on your own, which nobody will set up on their own. They need somebody to help them set up because it's kind of a sensitive issue. And it wouldn't address many things, such as if you have one of your investment properties in an LLC versus the other ones that are in separate LLCs, well, every year you have to renew these LLCs and it costs about $350 each. So that's a lot of money. That's actually on the low side. Then these attorneys firms will want you to pay monthly like $50 to stay with them. And it just was too expensive and too cumbersome. So God forbid something happens to you, your husband, your wife, will actually be trying to figure out, what do I do with all this? They have to call the attorney. Attorneys will charge usually $350 an hour. They'll say, okay, I'm gonna charge you special $200 an hour. It was too cumbersome, too complicated. And so I was looking for a powerful structure for lawsuits. People can sue you. Something that can help you if you're going to get married, you're single, and you want to actually have a prenuptial agreement, but you don't want to tell that future husband, future wife, hey, can we write a prenuptial agreement that my assets are mine, whatever you have is yours? And then when they get married, they have to write what's called a postnuptial agreement. Is there a way to do it that protects your asset for you, just in case something goes bad? I mean, 50% chance of divorce. Let's say you're a dentist, you're a chiropractor, you can get sued. What if you file bankruptcy? Will they take all your assets? And this is going to address many of these issues. I know some of you are raising your hands. I promise I'll take questions. Don't worry. You can see, like, many websites, like some attorneys they just love to litigate, and they say, if you want to sue, call us. We're going to go after whoever. You want to sue your doctor, you want to sue whatever. There is one called whocanisue.com, and they tell you if this person is worthy to go after because they have assets, they have equity. And often people say, I don't think I'm going to get sued. I'm a nice person. Who's going to sue me? Well, I used to think like this as well, until close people working with me, like the architect and the contractor and all this, started telling me about some horror stories. And I started in my events, when I would do events, I do live events, I don't do them that often anymore. I would ask the audience, how many people got sued in the past? And like 50% of the room would raise their hands. And just the stories blew my mind away. And I realized I had to develop something. And we did this about 8-9 years ago. So it's been up and running for a while, proven to work very well. Number one liability, so the risk comes from car accidents. If you drive a car, if your spouse drives a car, if you have kids that drive a car, anybody driving a car, that's the highest risk, believe it or not. The second highest is partnership disputes. People go into a partnership very happy, very friendly, etc. And then something goes sour. You either make a lot of money, so they become very greedy, or you make very little money, or you have losses, so something gets bad. So you have to learn how to protect yourself. And I'm not going to bore you with all the risks that you have, but it's endless, and it keeps increasing every year, if you ask me. And a lot of the times you don't realize that the risks are unpredictable. I mean, who knew that there'll be a COVID-19 that will literally be a global pandemic that will shut down the world? I mean, it's just unbelievable when you think about it. And how many law firms were predicting the increase in lawsuits, etc. And the risk is high. It has been high. There were predictions in 2022 that the risk is high because of employees suing employers, and it's been a fiasco there, and many other ways to sue. But it's getting higher going into 2023 because of the interest rate increase and what the government is doing. And I was just talking to someone yesterday, it's a lender, and he says to me that they renewed the loan for a developer, and they found out the developer is getting sued by the contractor because they didn't pay in full. And now the lender is going to sue the guy. I mean, so this developer is getting sued by everybody, but he's not set up correctly. And I'm going to show you how to actually set up here in a second. But first, I want to talk to you about what attorneys talk about, so you understand and you can position what I'm going to talk about versus others. So a lot of people think like, oh, I'm just going to set up a living trust and that's going to protect everything. Not true. It's part of the structure, but it's not. Some people say, okay, maybe joint ownership. So if they sue me, they won't take the whole property, they'll take just part and all this. You hear a lot about family and limited partnership. I will debunk all this. So people ask me, well, should I transfer each of my assets into a separate LLC like the attorneys have said? Well, these attorneys will set you up, but here is the problem. If you do that, you run a few risks. The first risk is what's called the due on sale clause. So if you have a loan with the bank and you transfer your property to an LLC, the bank can actually come back and ask you, you sold the property, you transferred ownership. That is, now your loan is due. You have to then prove to them that this entity is yours. You have to actually sign under penalty of perjury that this is true and correct, because you have the right to transfer to a trust or to an LLC that is yours. but it's cumbersome to go and explain that to lenders. Number two, quite often the city, I mean, I had to do that a while back in California, and they wanted me to sign and prove that I'm transferring it at the right value, so they don't charge me a transfer tax, which is very expensive in many states. There is actually the risk of the tax assessor's office coming back and revaluing the property and saying now your property tax goes up. And your equity is still at risk, because whoever is going to sue you and you have that specific LLC, you have debt, let's say the property is worth $500,000, you have a loan for $300,000, you have $200,000 equity. Whoever is going to sue you is not going to go after all your other assets, but they're going to go after the insurance you have, and they're going to go beyond the insurance for the $200,000 equity. And they can actually get a charging order from a judge that says they will force you to sell the property to settle. This happened to an architect of mine who was worth over $5 million and got wiped out, and he was 71 years old. So then he came back to ask me, what was the setup that you talked about? Oh my God, I should have done it. So you don't want to get yourself into a situation like this. People ask me, how about if I go to anonymous Nevada corporations? Well, you can Google this and see if I'm telling you the truth. If you are sued and you get in front of a judge in court and the judge asks you, so this anonymous Nevada corporation that owns this, who is it flowing through to? If you don't respond, or if you deny or whatever, they can actually hold you in contempt of court. So you have to tell them eventually who the owner is. There's no such thing as anonymous. It's a good pitch for seminars, but in reality, in court, look at court cases. You can go to nolo.com and see what court cases have said. You talk to some attorneys. If you just at the end of the call some attorneys and ask them, hey, how can I protect myself? I have a big business, I am growing, I have some real estate, I'm worried. They may start pitching on these offshore trusts which go nowhere. Don't like these, never go outside the US. I mean, off what shores? People come from outside into the US, it has the best laws, etc. And people ask me, well, don't I have insurance? Wouldn't that be enough? Well, insurances, you can talk to attorneys that actually protect insurance companies. We've interviewed them on the website. We have retired judges that I've interviewed, and they will explain to you that an insurance loves to collect your premiums. When it's time to pay for any claim, they're gonna look for what's called contributory negligence. Oh, you had a property that's rented and the renters had a party and they fell, some invitees fell and broke their knees or broke the elbow, and the guy's a dentist, now he's suing you for millions of dollars. The insurance is going to say, you set the scene for that to happen, and we're going to only cover so much, or we're not going to cover anything at all, or it's going to drag forever to cover something which is going to devastate you financially. So how do you achieve peace of mind? The way to achieve peace of mind, I'm going to explain it to you theoretically first, then I'm going to show it to you in writing, then maybe I can even show you a video, because I want you to get it. The key thing is to understand, if you have just one property, if you have just a home, just get the maximum insurance. And in states like Florida and Texas, we have homestead that may be able to protect you. But if you have one home and one investment property or a business, you must look into stripping your equity. So when you have equity, it's not the assets that you have, because if you have an asset worth, again, $500,000 and you owe $300,000 to the bank, when you get sued and they see that you have $200,000, they want the insurance coverage and they want to go after equity that you have. Any good attorney that litigates will go after that. And the way the courts work it is they say, okay, you were wrong, so this is the lawsuit, we want to give them this and punitive damages, etc. This is just the US and the way it works. Very litigious. So the 200,000 equity that you have is what you're going to lose, and that will wipe you out. So what do? You cannot tell the judge, I don't have this property, or I don't live in any home. What you need to understand is, how do I actually protect myself? Bank of America, let's say, gave you that first lien, the first mortgage for $300,000. If you are forced to sell the home, when they force you to sell it, Bank of America gets paid, because they're creditors. And the laws of the United States are set up to protect creditors. If you understand that the United States system is set up to benefit lenders and to create this loan system that helps us grow. And it is the best way for an immigrant or somebody starting with nothing to become super wealthy because of the lending system of the United States. So don't fight the system, understand it and work it, and you become very, very wealthy. So the way to do it is, once you have a loan and you improve the property or you hold it for a while, you have that equity. How do you protect the equity? Wouldn't it be great if you have a first lien, first mortgage to Bank of America, and a second mortgage to yourself? That would be amazing, because if they force you to sell the property because you made a mistake and you hit somebody with your car, you hit their bicycle, you damage their arm, or God forbid kill them, that family's coming after you. But you have insurance. You want to settle with what insurance you have. You don't want them to go after your entire livelihood and net worth. So how do you do it? We help you set up a Wyoming LLC. I'll explain why Wyoming in a minute. Wyoming LLC. And the Wyoming LLC, instead of loaning you money for the $200,000 that you need to record as a second mortgage against the home, because the first mortgage is $300,000 to the bank, you have $200,000 equity. We want that to be also owed to somebody. The $200,000 will be owed to your Wyoming LLC, not as a loan, because Wyoming did not give you money like Bank of America gave you money, but you're gonna write an IOU, in other words, to fund the Wyoming LLC, to capitalize it, to put money in it. You can put cash, or you can put an IOU. I will put the cash later. When you put an IOU, it's a promissory note, and we can record that lien against your property. And if you have 10 properties, one Wyoming LLC, we can record liens, 200,000 here, 100,000 there, 50,000 here, $500,000 here, etc. And if you have a business, we can record a lien, promissory note, to fund the LLC for millions of dollars if you want, or 100,000 or $500,000, based on how much equity you have in all your properties. You don't change ownership in any of the properties that you own. You don't change ownership. If it's in your name, it's in your name. We're going to actually put a lien and strip the equity. So if anybody want to see what you own, they're going to see what you own, but they're going to see what you owe. You understand? They're going to see that you owe Bank of America $300 and the Wyoming LLC $200. Why? To capitalize it. Bank of America gave you money. This is an IOU. And then they're not going to be able to go after anything that you own, because there is nothing of net worth to go after. They will settle with your insurance. They will set. This is not a substitution to insurance. It's to supplement your position. This is extremely powerful. It gave me peace of mind. We have hundreds of students that have done it through the years, and investors and developers. We even had a lady doing a deal in Texas. She's a developer, so she was building this pool in the backyard. After the contractor started building the pool, he came back and said, "No, I need an extra $17,000 for the pool, because it's going to cost more." She said, "But we already negotiated, and this is what we're going to do." So he wanted to put a mechanic's lien on the property. Well, guess what? He found out the property, she had bought it for $200,000 and was doing repairs for $100,000. So $300,000 was going to be total cost, and she was going to sell it at $450,000. But we recorded the lien for her at the $450,000, wiping out any equity. When he saw that there was no equity, he said, okay, I'll settle for an extra $3,000. And she finished that situation. She protected herself from a guy who's trying to gouge her, trying to take advantage of her, thinking, "Oh, you know what, I'm going to do this." I'm not saying all contractors are bad. By the way, we have great contractors, but even a contractor, you can protect yourself so none of your workers can go after you or your equipment, etc. So the key thing is to understand how to structure this. Now, I'm going to continue with some things, and then I'm going to show you why this is so powerful. So you don't want to show equity in your assets. First of all, the first step you're going to do is figure out how much equity you have. So you got one property, two properties, three properties. Okay, I owe this to the bank. I have so much equity. We set up one LLC for you in Wyoming. We have the operating agreement with 13 business reasons. When we set up the operating agreement, that's the master work, because the operating agreement of the LLC is what you're going to take in court. God forbid you get sued, and you go to court and they tell you, "Hey, did you hit this person?" "Yes, I did." "We have it on camera." "Okay, yes, I did." "Okay, is this your property?" "Yes, it's my property." How much do you owe? The property's worth $500,000, I owe $500,000. That's it. Okay, you have insurance. Yes, Your Honor, I have insurance. They're going to look at the plaintiff. They have insurance, will settle for the insurance, will move on with life. Because the operating agreement will show 13 business reasons, not just we set up this for asset protection. In other words, what are 13 business reasons? This LLC is set up to consolidate family assets. This is set up to be able to pass on the wealth to the family members. This is set up, and we have all these reasons. This is done by attorneys. We have actually done a great work on this for years, and we tested it federally in all the states. This is the most airtight structure. Now, no cash to capitalize it. So let's say you and me, just listen to me for a second. I know some of you are reading this, so here, I'll go back to this one. Stay focused with me. Let's say you and me are setting up an LLC, and you put $100,000 cash. We open a bank account, we're partners, you put $100,000. And I say, Susie, John, I'm so sorry, I don't have $100,000. You're gonna say, well, I put 100. Okay, I'll tell you what. I write an IOU 100,000 to capitalize the LLC with my share. You're gonna say, well, let's record this against your property, Sharif, so I make sure that you're gonna pay the 100,000. So now we write a promissory note, we got a mortgage, we go to the county and we record 100,000 lien to the benefit of the Wyoming LLC, and it's recorded against my property. And now I'm gonna pay, let's say 4% interest on this. And we'll make it all due in 15 or in 30 years, and it can renew. And I can make just like one payment per year, which is interest only payment. And the other 11 payments that I'm supposed to make will accrue to the amount owed. So every year I owe more. As the property increases in value, I owe more. I owe it to the LLC. Now, I'll take you out of the equation and I tell you that's how we set it up. We set up a Wyoming LLC for you, and you say, I'm going to capitalize it by so much money. And that so much money is the equity you have in your properties, and we record a lien for you against each property. So you have no cash to capitalize it. We will use the equity in your assets and pledge it to capitalize the LLC. This is spelled out into the operating agreement. It's legal, it's powerful. As a matter of fact, there are 3 liens you can record in the United States. The first lien is that when a banker or a lender or somebody gives you money, it goes through escrow, title company, whatever, and then it gets recorded. That's the first lien acceptable by law in the United States. The second type of lien is work for hire. You hire a contractor to build a pool, to do some work. You don't pay the contractor, they can record the mechanics lien. That's approved in the United States. The third type of lien is an IOU. Is to capitalize an entity, you can record that lien. And I'm telling you, this is how it works. Okay. So we draft the promissory note for each asset based on the legal requirement for each county and state. So you have some judicial states like Florida, you have some non-judicial states like Arizona, like California. So usually in the United States, you have the judicial states on the East Coast, non-judicial states on the West Coast. And what's going on is when we're doing this work for you, we have the legal departments, the paralegals, etc. Each state is different. Sometimes counties are different. Like in California, they want to know, for example, the amount of the loan, but no terms. And some other states, it's going to say, let's say the lien is $200,000 at 4% interest payable and so on. So it all depends on what the requirements are. And we handle all this for you. And actually, we send you the lien, all sent by email. It's all done within a few days. And you send it to the county because you're in control. You can record it for your Wyoming LLC. You get a lien recorded against each asset to show that it is encumbered. That means that you owe money, that you don't have equity in any of these. It's owed to you. The Wyoming LLC will flow through to you in control of it. And if you have a business, we record what's called a UCC1. UCC1 is Uniform Commercial Code 1. It's a lien that makes anybody trying to go after you, if you have a business, they can go after your machinery, they can go after your inventory, they can go after your receivables. A friend of ours from the Santa Clara, California, I have a home in Santa Clara, it's in Silicon Valley in the Bay Area in California. She knew my wife and she had a factory and they have a huge machinery. Each machine is over $1 million. And she called my wife one day and she said, we have an employee that's disgruntled, and I think she's going to sue us, and she's going to go after this piece of equipment. It's $1 million. What do? We set her up. We stripped the equity on her home, 2 investment properties they had, a small apartment building, and one was like a duplex. And we filed a Uniform Commercial Code 1, which is a lien, again, to capitalize her Wyoming LLC. And what happened is when we put that, we put the serial number, that is, we're leaning the equipment with the serial number of the equipment of each machine. So even if she gets sued and loses the lawsuit, she pays nothing. The insurance covers whatever. They can go after her business or any of her equipment. So this is extremely powerful and actually very simple, because if she buys a new piece of equipment, we just add a lien on that. If she buys another home, we just add a lien. Adding a lien just costs you for just the lien addition. And you set up one Wyoming LLC, and that's all you need. I don't care if you have, we had this guy has 16 subways, and he had 16 separate LLCs. His renewal fees were through the roof, maintaining all this stuff and so many bank accounts. Every time he submits for a loan or a credit line, he has to submit all this from separate LLC. It was such a mess. Got rid of all this, one Wyoming LLC, and then stripped the equity on all these, made his life very simple. God forbid I die, my kids will know what to do, because it's very simple. The Wyoming LLC, actually, we have it flow through a living trust, the living trust, and the living trust is right there. And it says, in case of Sharif Merawar's death, it goes to the kids. And so it even works to avoid probate and make it extremely powerful. And that's the idea about it. So what does it accomplish? No one would want to sue you, because God forbid you hit somebody with that's on a bicycle. It was a dentist. You're driving your car. You're trying to adjust the music or whatever you're doing. Boom, you hit this dentist on a bicycle. The dentist breaks his elbow, and now his hand shakes. He can no longer do surgery or whatever he does. And you get sued for millions of dollars of his potential income that he no longer has. Well, guess what? When he goes to an attorney, a litigant attorney, they're going to see that you have certain assets. You can't hide these, okay? Now, when they see that you have assets, they're going to see how much equity you have. There is no equity. There is nothing to go after. So they're going to have to settle with your insurance, because no attorney want to sue and go on retainer to get a third of the lawsuit's winnings when there is nothing to win. They're going to just have to settle for the insurance. They're going to say, I'm not going to pursue this. If you want me to pursue against they're going to tell the dentist, if you want me to pursue against this guy that hit you or the lady that hit you, you're going to have to pay me hourly. Nobody's going to want to do this. And the beauty is, Wyoming LLC, if someone sues you, actually, they say they're crazy enough to want to sue you, it will be at a great expense for them, because Wyoming has a privacy law. It's just private. It doesn't show who owns the Wyoming LLC, even though it's owned by Living Trust, which the Living Trust is in your possession. And in the United States, it doesn't say who's the beneficiary. So it's harder for them to get to you. And if they win and they're awarded a monetary sum, because that's the whole idea of suing, not only do they not collect anything from your assets, but they end up having to pay tax bill called a phantom income. So they get hurt for suing you and going after more than they should, because they should have just settled for the insurance. So you made a mistake, you have insurance, it protects you. They're not going to go after more, because even if they win, they can collect. If the court gives you a charging order and they force you to sell the property, Bank of America will get paid and your Wyoming LLC will get paid. So no judge is going to enforce that, because it's going to say there's nothing for you to win at the end, settle with the insurance. I'm not going to go for it. And even if they win and they end up with a tax bill. And I'll even give you the IRS code. Bear with me a second. I'll show you why Wyoming does it. And I'm going to tell you right now, Wyoming is the state of choice. Number one, it's easier to deal with them than with the Nevada. Nevada has some protections as well, but just renewal fees on the business renewal part is $360 there. Plus you have to pay the ongoing fees for the representative there, the agent, and so it end up costing you like $900 a year when the Wyoming costs you a third that. And Wyoming started the LLCs in the United States in the early 70s. So the entire structure of laws protect you. So if there is a charging order, it doesn't affect the LLC and all the money owed to it. So you get sued, they can go after you. You die, the money goes to your into the living trust, and it goes to your kids or loved one, whoever. Extremely powerful. So you don't need to transfer assets. The Wyoming LLC does not need to register in Florida or Texas or New York or California. It's not doing business there. It is owed money from there. These are liens recorded to benefit. So you don't need, if you own the property in your name, leave it in your name. Actually, you should own your home in your name because there are a lot of tax benefits when you sell it. If you own the home for 2 years, according to Internal Revenue Code 121, if you're single, you get up to $250,000 of tax-free profit. That's your primary residence where you live. If you're married, you can get, if you lived in the home at least 2 years in the last 5 years, at least 2 years in the last 5. Okay, any of the last 5 years, you live 2 years in that home, you and your spouse. When you sell it, you get up to $500,000 tax-free profit. That's Internal Revenue Code 121. So you want the property to be in your name. The investment properties, if they are in your name, fine. We can still strip the equity. Nobody can still go after you. If they're in an LLC, fine. Don't change. We don't transfer anything. We set it up very clean, very powerfully, and it just works like magic. No complicated paperwork to maintain a Wyoming LLC. This is not a C Corp where they can pierce the veil, and it's a very simple setup, very powerful. So why Wyoming? It started the LLCs. It gives you anonymity. It gives you charging order protection. I'll even give you the code of the charging order protection in Wyoming. Everything I tell you, you can verify, and we set it up for you, make it easy. So, well, can I take some questions? I don't know, Ashley, maybe Ashley has been my vice president since 2003 in the education company. And, Alexa can take the questions, but since Ashley probably can have been going through them, let's go through them. Can you ask me a few questions that came in, Ashley?
Absolutely. Can you hear me?
Yes.
All right, perfect. Julio is asking, does it apply to your homestead here in Florida?
Okay, great question for homestead. So I get usually this question in Texas and Florida. And I even have an interview from Judge Lawson, a retired judge from the state of Texas, where he explains that when you get sued and it's your home and you have homestead, you're protected until you die, because then they go after the estate and they will collect on the lawsuit. So long as you're alive, they won't be able to go after much in terms of your home. But when you die, they go after the estate. So yes, you should still use this in homestead states. And the interview, by the way, the interview is on kmagb.com. You can click on free interviews or whatever, and you will see it.
All right. Next question coming from Marlena. She said, can the Wyoming LLC be part of a self-directed IRA so that payments are received by it, or is this a prohibited transaction as self-dealing?
Okay, so can you record it? So the property is owned by an IRA, and she wants to record it to strip the equity for the IRA. Yes, you could. You just have to fill out the paperwork with your IRA custodian, because it's like a husband and wife. If you're going to record the lien, the husband and wife must sign on the lien recordation. If the property is owned by the IRA, you direct the IRA, it's self-directed IRA, you're going to tell them, I need to record this lien against the IRA. And the payments, you're going to have to make like one payment a year. And we structure the payment based on your IRA contribution each year or something. Or if the rental income is coming in, you make just one payment. You're making, remember, that payment is made to the Wyoming LLC. So you have to get the approval of your IRA custodian to make sure it's done correctly.
Perfect. Julio has another question. How do you protect your cash in the bank and investment with cash accounts? Are IRAs protected?
Okay, so great point. So IRA usually are not protected, but here is how it's done. So we had one of the clients who had, I don't know, 50 or some amount in the trading account, and he said, look, it keeps growing, I'm doing well, and I'm scared. And when I set up, what do I do? Well, when you set up for the Wyoming LLC, we give you the top banks that do virtual banking. Just like you're going online with Wells Fargo, you will set up with a reputable bank that actually in the US that you set up for the Wyoming LLC. Remember, when you make a payment, it's from your account, let's say the property's in your name, or from your LLC account if the property's in LLC, to the Wyoming LLC bank account. And it flows through to you. It's a disregarded entity. So you make a payment, it's tax deductible for you. Goes to the Wyoming LLC, sits in the bank account, and from that bank account, you can make a payment of property taxes, property insurance, or whatever, because it's flowing through to you. So expense, income. It's called tax neutral. There is no expense. When you set up that Wyoming LLC bank account, you also can put a trading, let's say stock market or cash. You can move the cash there. It's part of capitalizing the entity. Or if you have a trading account, you can put the trading account in the name of the Wyoming LLC. So it's protected. So anybody trying to sue you, they can get the money out of the Wyoming LLC. There is no, the charging order has a protection in Wyoming. I'll show you how. Additionally, I need to explain that you can withdraw the money anytime. You can sell a property and we cancel the amount of lien recorded. Let's say you want to get a credit line against the property. You go to the bank, they say, but there is a lien payable to Wyoming LLC called ABC Financials. Who are these people? You say, that's my entity. You can show them the living trust paperwork and you do substitution of collateral. It's just like $40, $50, it depends on the state. And it just cancels as you get a loan from the bank or credit line, and then you record it as a second. So it gives you an extreme powerful position. Continue.
All right. Next question. What insurance limits do you suggest for the other part to accept and settle?
So this is, of course, an insurance, licensed insurance person should answer it. But usually I do coverage like $1 million. If you think like you don't need to pay that much, $500,000 usually will cover most incidences. But $500,000 to $1 million, I try to go, let's say $500,000. If I have a bunch of properties as a student, I would say if you have a bunch of properties, just put an umbrella insurance. So you have insurance. First, act prudently. Number 2, get insurance. Number 3, get umbrella insurance. Number 4, use the structure to make sure as you build equity in life, nobody can go after you. So no matter what insurance you're gonna have, get umbrella so it covers the difference and the rest. And also I wanna mention something, if I can jump for a second. So I was talking to this gentleman and we're doing a training, and he said to me, he was 57, I remember, and he said, my girlfriend, I said, excuse me, your girlfriend, how old are you? And he said, 57. I said, why don't you get married? And he goes, no, I have some assets. She has some assets. I'm afraid this will be, I've been divorced before. She took everything. And I said, well, why don't you tell her about prenuptial agreement? No, I don't want to tell her. It's like, I don't trust her. Well, you don't trust her. You just told me you don't want to get married because you have assets. You're afraid she goes after them if something goes bad. He said, no, I don't want to go there in the conversation. We get along so well. I said, well, here's the answer. Let's set you up now that you're still single and the properties are in your name and your LLC's name, and we can just set up the structure and strip the equity. We set up the Wyoming LLC, we'll record liens, and now you have all this set up in a living trust that goes to you, and when you die, he had one son, goes to your son. Now, when you get married, you already owe that money to the Wyoming LLC. It's already set up. It's like a prenuptial agreement without telling her it's a prenuptial agreement. Moreover, it's a postnuptial agreement. So as the property values increase, I told you you're making just one payment to yourself that flows through back to you, and 11 payments that you haven't made, interest only, accrue to what you owe. So as the properties increase in value, you end up owing more. And when you sell any property, you just cancel the lien that you recorded because it was to capitalize an entity. It wasn't money owed. There is no tax impact. I was going to capitalize the entity for an extra $200,000. No, I cancel that. Like when title company sends you the form saying you owe to ABC Financial in Wyoming LLC an amount of $200,000. Can you tell us what the payoff amount is since you're selling the property? You just say, I owe nothing. It flows through to my living trust. Here it is. It's so beautiful. So unbelievable. It's prenuptial, postnuptial. You're a dentist, somebody sues you, there is nothing to go after. Not your equipment, not your business, not your assets, nothing. They just settle with your insurance. Okay, continue.
Okay. And we use a lot of dentist examples because we have a lot of dentists,
Yeah, no.
just to let you guys know. All right. Next question is Jean. When you liquidate, do you have to pay the IOU money into the Wyoming LLC?
No, I just said, I know that probably was asked before I covered that part. No, you don't, because it's like, I was going to capitalize the entity for 200,000 more, and now I don't want to, so I'm canceling that. I don't want to put so much. It's like, when you set up an entity, some people don't realize this. So you can open a bank account and capitalize the entity with $100 or $1,000. You can put 100,000. That's not taxable to anybody. That's to capitalize the entity. When you take the 100,000 back, there is no taxable event here. And that's exactly the same thing. Those are small nuances that I'm explaining to you that attorneys will not explain. Like I've had attorneys, when I would come up to the platform and explain to people how to set them up for less than $10,000, and other attorneys want to sell these structures at 30,000 plus ongoing fees. The attorneys would come to me and say, "Why are you doing this? Let me go on your platform and I'll sell my structure." And I'm like, "No," but they say, "Well, there is no money in what you're selling." Because it doesn't matter. I want to protect the students. I want to protect my people. And then we can do other business. I can invest in my real estate funds. They can take, with the saving, I can take the other coaching program, buy another property, etc. So the idea here is, how do I buy a property, add one lien, just pay for one lien additional that goes to capitalize the Wyoming LLC, and that's it. I have peace of mind. I keep the insurance going and all this. But that lien is set up for as long as I continue owning the property. Continue.
All right. Next question. Does the personal home need to be done with the Wyoming LLC?
Yes. Remember, when you say it need to be done, we need to record a lien saying a promissory note IOU. So if your home has 150,000 equity, we record 150,000, let's say 160,000. We don't go crazy higher than the equity amount. And we record that as you record it. We send it to you to record it as a second lien against the home going to the Wyoming LLC. Mm-hmm.
Next question. Fabiana asked, do you suggest transferring your primary home into the name of your living trust?
I don't like transferring ownership of anything. I like to keep it all and then let it go into the Wyoming LLC stuff, into the living trust. Now, for your own home, you could, to answer your question, it will be good because it avoids probate, etc. But just check with an attorney, because it has to do with all what you own and all this. And if you already have the home in a living trust, we strip the equity, and ultimately, if you have that living trust set up, when we set up your own living trust, we just add all this flowing through to the one that coming from the Wyoming LLC liens. So the Wyoming LLC itself flows through to the living trust. If you have one, we can work with you. We'll see how to work it through the attorneys. So sometimes there are some nuanced differences between, because we have people that own a property in Florida, property in Wisconsin, property in Texas. So each state has different paperwork, and we get it all to flow to a living trust. So yes, we can work out.
All right. Jose is asking, so this structure will prevent me from getting a HELOC or a cash out refi, correct?
No, it won't prevent you to it. As a matter of fact, for example, we had somebody with the first mortgage with a Chase Bank. So we had recorded the Wyoming LLC lien. He went to Chase Bank and wanted a credit line for 100,000. So the bank told him, okay, we're happy to give you 100,000, but you need to pay off that lien. There is a lien here for 200 some thousand. And he said, oh, here's my living trust. You have it all on your email. Like, you can literally open the living trust, show you how to scan it. Because when you send you the living trust, you fill it out. It's 8 pages. It's very simple. You notarize it and you keep it, but you scan it so you can show the bank, I am that living trust that you see here. And don't call it in your name, right? Let's be smart. Some people say, oh, I set up a trust and it's called the Cohen Family Trust. No, you want it to be like ABC Financials. You want it to sound like a financial company for Wyoming. And you show the bank, this is mine. I'm going to cancel that lien. So that you can get the HELOC, and then you can record just the title company escrow can record it as a second lien or a third lien. You just want to strip the equity, no matter how much, how many positions. But you can sell the property, you can get a home equity line of credit, you can do cross collateral, you can do whatever you want. Very simple. Have I lost you guys? Ashley?
I'm not sure where she is, but I can.
Yeah, let's continue, Alexa. Thank you.
Absolutely. So does recording the lien on the property without lender approval trigger any mortgage clauses or due on sale?
It's an additional lien. It does not trigger a due on sale, but it could trigger a question from a bank if you own big commercial properties. Like I've had people that own like $80 million apartment building, et cetera. So then they're afraid to get sued because they have like hundreds of renters. They record these liens. And when the lenders does a review, the lender shoots a question over to them saying, hey, we just saw a new lien here for, let's say, $3 million on the property we loaned you on. Could you explain who that lender is and how come you didn't come to us? You should have asked us for the for approval. Sometimes the loans, and then they say, no, this is for asset protection. Here's the operating agreement. I am the living trust. This is going through to me. As a matter of fact, I used to be with client services for Wells Fargo. Wells Fargo client services is like when you have over $1 million in deposit, etc. You meet with their executive committee to give you ideas. Like they tell you things like, we can set up this and that. And I had explained to them that I set up this. And when they saw the living trust is flowing through to me, they totally understood. And they cannot deny you that because there is, in 1982, there was a case called the Saint Germain Act. Saint Germain Act allows you to protect yourself and gives you that legal right. So no, it's not an issue.
Very good. Carlos is asking, in Florida, if I put my home in a land trust, do I keep the 500K capital gain if sold after lived in for 2 out of the 5 years?
Yes, you should. You just have to prove that this was your primary residence, etc., and check with your CPA, please.
Next question. Does this asset protection work even after properties have already been transferred to LLC and land trusts?
Yes. No matter who owns it today, whatever the ownership is, call us. Call us. At the end of this call, I'm going to give you a phone number. Call us. Let's chat with you. I know a lot of people will be calling. So Ashley, I don't know if Zach with you and all this, but we will schedule you. We will answer all your questions. This is very personal specific. It's not like, I wish it was one template for everybody. Hey guys, here's the template. Just do. It's very specific because people own separate, different type of properties, different equity amount, etc. So don't worry. Yes, you can. Yes, we'll help you.
All right. Next question goes back to, what if I have cash and stocks?
Yeah. Okay. So the cash and the stocks will go, you set up a trading account that will be under the Wyoming LLC. The cash will go to the Wyoming LLC bank account, which you fully control. And that's how we set it up for you.
Perfect. Next question. Do we need to open a bank account for the Wyoming LLC?
Yes, virtual bank account. And ideally in a separate state. So you're in Florida, we set it up in another state. But it's virtual anyway, so it's not a big problem for you.
Yeah, and in part of the setup, we walk through that entire thing and give you a variety of different options to choose and exactly how to set that bank account up. So we have a checklist for that, so we can get you that once you set up. Next question's coming from Carlos. Wyoming LLCs will be disregarded for tax purposes. That's a question, even if it's multi-members, correct?
Yes, it's disregarded if it's one person. If it's multi-members, it's called a flow-through entity. Flow-through to flow through to all the members. So let's say you have a business and you have a partner. You need to explain to your partner what I just explained to you, if you can. If not, have your partner come on a call and she or he will listen to what Ashley or we will explain it to you again. And then we will explain to them that you both have to sign on the lien that's going to be recorded against the business. And let's say you owe 60, 40, etc. We'll record it like that.
That guy needs to put a lien on his plane. All right, next question is Ariel. She said, do I ever have to make payments to the Wyoming LLC? And how do I report those yearly taxes for the Wyoming LLC?
Okay, so let's say it's $1 million that we recorded against your properties, and we put on the promissory note, this is the work of art, the promissory note. It's gonna say 6% interest, let's say, or 4%, but let's say 6%. 6% on $1 million is 60,000, interest only. Minimum required payment, let's say one payment per year. What's one payment on 60,000 a year payment? Is 5,000. And it's gonna say 11 payments in interest, which is 55,000, shall accrue to the principal amount owed. So you owe $1 million to your Wyoming LLC. Next year, you're gonna owe $1,055,000. So right before renewal, when we send you, hey, you need to renew the Wyoming LLC, we send you the reminders. You're gonna actually renew it is like very little amount. I'll tell you in a minute. But you make a payment to yourself, $5,000. It's out as an expense for you into the Wyoming LLC. That's income back to you because it's a flow-through entity, disregarded entity. So you make a payment of 5, income of 5, meaning it's tax neutral. That's the correct term for the IRS. And when you file taxes in Florida for your Wyoming LLC, your accountant will file a form called informative tax. Informative form is just one form saying Wyoming LLC flow through to Joanna at this is Social Security and whatever. So it's just flowing back through to you. So it's tax neutral. There's no tax impact. You file one form. It just protects you and gives you total control. And I can literally walk up somebody, punch him in the face, break his nose, and he won't be able to do anything. He'll have to settle with my insurance. That's extreme. Of course, I'm not going to do that. I would not break somebody's nose. I'll just probably call the police. Let's just give you an example.
All right. Next question is coming from Sharon. I already have a Wyoming LLC set up, but I haven't used it. Can you help me with putting all my assets in?
Look, my suggestion is let us set it up right, because we need to initiate the Wyoming LLC with the proper operating agreement, the proper filing, and all the paperwork that comes with it. We can look into what you have, but I doubt you have the operating agreement that we have masterminded it with several attorneys. And let me tell you, when I came up with this, when I started thinking, this is many years ago, and I started thinking, how come when somebody gets sued, the lender never gets hurt? Like if I go to your home and we have a party and I slip and fall, or something happens to me, and God forbid, I sue you, your lender always gets paid in full. If you're forced with a charging order to sell your home to settle, I get from your insurance, I get from your equity, but the lenders, the creditors always get paid. I said, how can I create situations where my equity goes to a creditor? Can I talk to a friend? Can I talk to this? Who can loan me that I give him the money back? No, that will be illegal. And I finally cracked the code, setting up a Wyoming LLC, which is a legitimate entity with a separate tax ID that flows through to me in a place that have charging order protection, that's approved by law to be capitalized. As a matter of fact, you want it to be legitimate, the judge is gonna ask you, have you capitalized this? Yes, Your Honor. Here are the promissory note. You're standing in court, you hit somebody, and you say, and the judge asks you, hey, do you own these properties? Yes, Your Honor. So this your investment property, you got millions of dollars? Yes, Your Honor. And you owe that money to the bank here? Yes. So that second lien here goes to Wyoming LLC for all these properties. Who owns the Wyoming LLC? It's owned by Living Trust for the family, Your Honor, and I am one of the beneficiaries. Oh, you disclose everything. The judge is gonna say, when did you set up this? Before the incident or after? This was set up in July of 2022. The incident happened in December 2022. The incident happened the day after I set it up. Okay, we honor it. We cannot unravel this structure. We cannot say anything. And by the way, let's say you're listening to me right now, and your neighbor is threatening you because your dog bit their hand when they were going to the mailbox, which is one of the cases we had with one of the students. If you set it up while the lawsuit is happening, it could protect you, but it's not as airtight. I mean, what I'm telling you is set it up before an incident, you're 99% protected. Set it up after you got sued, you're 50% protected. But there's no such thing as 100% protection, because it just doesn't exist. Even the IRS code, the IRS themselves tell you, well, it depends how we we understand what's going on and how we do it. But this by far, and I've been in the business 42 years, this is by far the most powerful structure. We've had hundreds of students. I've had developers, students that develop properties where the neighbors come over and want to sue them, etc., etc. But they were set up. And the guy said, "Man, I'm sorry I put the fence this way. I can move it. I can move the fence." No, I'm suing you. You're a developer. You're building this $7 million property. I'm coming after you. I'm sick of the noise you're making every day. And guess what? He said, "Okay, call your lawyer. I'm sorry. I'm happy to move it, but you want to sue me, sue me." Her lawyer called her back. He said, "Listen, the guy owes the bank and owes some Wyoming LLC. There's nothing to go after. Even if we win, you're going to end up with a tax bill. Go back and work it out with him. Let him move the fence. And if you insist on me suing, I want to get paid up front because you're not going to collect anything." And guess what? The guy called the office, talked to Ashley, and he said, "Oh my God, I'm going to get sued." She said, "You're not going to get sued. This is a lawsuit prevention." Okay, got too excited here. Tell me some more.
All right. Next question. Would this structure be good for a non-resident person in the United States?
Yes, absolutely. As a matter of fact, if you're a non-resident, if you're Canadian and you own properties here, the Wyoming LLC will be set up with a tax ID. And that's the whole idea. You will protect whatever equities you have here. We'll avoid lawsuits and extra expenses trying to get attorneys to protect you. Cool.
All right.
So
Sandor is asking, would this structure work if I have funds in a Roth IRA?
If you have funds in a Roth IRA, will it work? Okay, you can't strip equity on a Roth IRA, and because if it's cash sitting in a Roth IRA, if it's 50,000 or less, most likely a judge will let you have it. It's like having life insurance. If the payoff is 50,000 or less, it protects people. But in a Roth IRA, let me think. No, I don't think you'll be able to do much. If the Roth IRA owns an asset, that's a different story. But not really. No, I don't think so.
All right. Next question. Would the Wyoming LLC own all your businesses and assets other than stocks instead of owning it yourself?
Okay. Remember, the Wyoming LLC does not own anything. It is owed money. You own the properties. Your LLC owns the properties, etc., and your businesses. You just owe some money to a bank and owe money to the Wyoming LLC, and that money that you owe flows through to your living trust that comes to you. So you still own everything. Like in my case, I have commercial properties that I own in my name. You know why I own them in my name? I get better loans. I get lower cost insurance. And when I prepare my financial statement, which nobody will tell you this, you know, if you bought a property for, let's say $1 million in your LLC and you depreciate it, you write off some amount. Next year, when you prepare your financial statement and balance sheet, etc., and you depreciate it, let's say 50,000, now it's on the books at 950, but it went up to $1.1 million. It's got to be 950 because it's depreciated value. But if you own the property in your name, when you prepare your financial statement, I bought it at $1 million, it's worth $1.1 million. Guess what? It goes at $1.1 million. Do you know how much easier it is for me to get credit lines and borrow when I have over 100 million in assets in Puerto Rico? When I have in California, as I sit here, you can look on my website, mixup.com, I have over 85 million in luxury assets in San Francisco, some on what's called Billionaire Row, 2725 Broadway. A property, 2760 Vallejo property. Right next door is the Getty Trust, 3 properties. Those are owned by my trust. This is huge, huge in so many ways. I don't have enough time to go through all the details, but you understand, you own everything. You have no equity for anybody to go after. You make a mistake, you have insurance. You have umbrella insurance. If you have a business, you have errors and omissions. And nobody, no matter what you did, can go after your actual equity, your net worth. You can pass it on to your loved ones with no hassle. Let me continue, and then if there is time, we'll take some more questions at the end. Okay. So how to get started? Fill out, we'll send you a 2-page document, and it's how to form the LLC, and we prepare for you the articles of organization. Articles of organization say, this is the name of the entity. We'll give you some names. I mean, you give us some names to see what's available. We customize the corporate minutes, and all this is sent to you by email with attachments, an operating agreement. We send you the operation manual, so you have an idea how it operates. We will prepare ownership certificate as evidence of your existence, that it's a corporate existence, it's an LLC. We provide the agent services for the first year included in the structure as required by Wyoming law. We get you the federal tax ID number so you can open your bank account. Don't let it scare you too much. It flows through to you. It's just you have to have a number so it legitimizes the existence of the Wyoming LLC. You pay no filing fee for Wyoming, and Wyoming gives you privacy law. That means it does not say who owns this. Okay, anything that if there is a lawsuit filed against you, it goes to the resident agent and they send you the document. We complete the promissory note with the equity stripping documents. So these are like for each property based on the state, based on the type of asset, etc. We prepare the documents. We in some states like California, it's a trust deed. In places like Florida, it's a mortgage lien. And you will send you these, you print them, you sign them, notarize them, and then you send them to your county recorder's office and give you 1 year support by email or phone. And the usual fee is over $10,000. Of course, talking to Anish, I've known him for years. We're going to do it at $4,995, and I will include one entity free. Okay, so your home, I think, should be protected with that. There's no extra fee for the lien, and the Wyoming filing fee for those enrolling today is going to be included also in the $5,000. And each year you'll just renew for $350, which will actually also include your resident agent, and all the fees are included in that. So you can take a screenshot of this so you know what I'm talking about. So people ask me, can I set it up on my own? Yeah, you can actually go to an attorney and say, listen, I need to do this, explain it to them, I need to do this. Here's the problem. For an attorney to start drafting from scratch based on each state, it's going to cost you a lot of money because they're going to charge you for their time. There is no way I think you can do it for less than 12 to 15,000. If you can, let me know who that attorney is, because my attorney is an in-house and this costs us the least amount. The key thing is you need to know what operating agreement to file and the 13 business reasons you need to put in, etc. And you need to know exactly how to fill out the promissory notes in a way that you make one payment, accrue 11, and do it in a way that's approved by law, because IRS has certain requirements for a lien to be correct and accurate and approved. And we've already done all the research. Actually, I've done research, I'll tell you this, to a point where I used to search for people saying, if you want a lawsuit and you cannot collect, call us, we will collect for you. So I would call them and they say, you pay us 50% of your winnings and we're going to go after this. And I started calling these people and I would say things like, I won this lawsuit and this guy is set up with Wyoming LLC that flows through like this and it goes like that. And I need to collect from him. Can you help me? And they would be like baffled. They would be like, I'll have to get back to you. That called me a couple hours later. No, that one we cannot help. This is airtight. Wyoming has no charging order protection. Wyoming has protection. There is a living trust. This is too complicated. There is no way we can go after this person. We have checked this federally, guys. Okay, you see John Lawson, the former judge I told you, State Bar of Texas. He used to be an insurance defense attorney and then became a judge. And he told me this is by far the best structure. And even for Texas, where it's homestead, when somebody wins a case, they put it under the estate filing. So when the owner of the home dies, they can still collect later on. But now I told you, with this structure, there's nothing to go after. They just can't, because there is no equity for them to go after. So how do you achieve peace of mind and stack the odds in your favor if you're involved in a legal battle right now? Best way is, here is the Wyoming LLC is fully protected against charging order. Here is the actual code, but from the Wyoming Act 1729-503. That gives you what's called charging order protection. What's a charging order? This is when the judge says, okay, there is a lawsuit against you. They won $2 million. Your insurance covered only $1 million. So there is another $1 million that you have to pay. We're going to force you. There's a charging order to force you to sell all your assets. Well, I owe the Wyoming LLC. So Wyoming says, I am not paying a penny out. So even if you sell everything, goes to the Wyoming LLC, there's nothing to go after. So the judge does not want to do it because there's no benefit to the person who won the actual case. Your Wyoming LLC has the properly worded operating agreement that gives you the legal and business reasons to exist beyond the asset protection. See, you have to show reasons for its existence. The promissory notes have interest-only payment with a minimum of one payment from yourself to the LLC per year. Other payments shall be accrued and added to the principal owed. This wipes out any future increase in value. So you got married today, and the property is worth double 10 years from now, and now your spouse is freaking out on you. It happens, right? Guess what? Thank you, we'll part ways. No reason to work any financial stuff. I owe a lot of money. Good luck to you and whatever you want to do in your life. And you can walk away as friends, right? Hopefully. You do not need to pay ongoing legal fees as you are in control to subordinate the loans, change their positions, write them off, cancel them. You can borrow, sell, you can stay in complete control. And God forbid you die, your spouse, your kids will not be overwhelmed. It's one living trust, it's one Wyoming LLC, simple structure, they can cancel it. They can literally just go to a title company and say, cancel all these liens if they want to. We're selling all these properties. And when they say, okay, what's the payoff on each lien? 0, 0, 0. We remove the capitalization. Simple. It took me 5 minutes to explain it to my kids when we set it up, and they were 10 and 11 years old at the time. Your Wyoming LLC will offer full privacy to owners and managers. Now, don't go walk around, broadcast to people, you know how I own this, you know how I have this. You know, if you're gonna get sued, you don't wanna tell people exactly how you're structured, all right? Plaintiff's attorney has to get a court order, a subpoena, misspelled here, sorry, to contact the registered agent for name and address. So the plaintiff's attorney will not work on a lawsuit against you on contingency because there is no equity to go after. So they're gonna charge whoever wanna sue you. And that discourages people from suing you. Plaintiff's attorney will would most likely discourage the litigants to go after you. They will have to pursue it through a lawsuit, which will cost them a lot of money. And litigants who will then pursue a charging order from the court will end up having an invoice from the IRS for amount of lawsuit awarded but not collected. This is based on Internal Revenue Code ruling 77-137. That's the code for what's called phantom income. You didn't get the income. Somebody's suing you. They won a lawsuit award, but they didn't collect any money. They get a tax bill. They're gonna come and beg you to settle. There is no way anybody in their right mind will sue and hurt themselves. So that's the power. And you cannot, and it's not like these people who win the lawsuit can pay with phantom check, right? They have to pay. And the structure can be passed on to your heirs, whoever inherits your properties, etc. So since Wyoming, I get a question, since Wyoming LLC would have all the promissory notes and liens owed to it, practically my entire net worth because of all my equity, what would happen when I die? And again, you set up the living trust, you have the certificate of ownership, we sent you everything, you notarized it, you sign it, it's in your possession. And I will include, those who enroll today, we will include the living trust for free for you. I don't want you to pay for it extra. And just to explain to you, your living trust info, all I need you to do when you contact the office today, I'll give you the phone number in a minute, is you're gonna put the name of the trust, who the trustor, usually the husband and wife. You can take a screenshot of this, but if you can call Ashley today, it's perfect because then she will walk you through this stuff. Pretty simple, pretty powerful. You should have done it. You should do it. This is the way to do it. And once you receive the living trust document, you just notarize it and keep them. And it's all sent together. And by the way, so you know how I started cracking codes on property, on property purchases and growing and real estate funds and all this. I worked for a billionaire. This is in front of his chateau. This is in outside Paris. His name is Edmond Bessari. He's a well-known guy. He used to be the right-hand person for Ronald Reagan, giving advisements on advising on the United States financial structures and economic downturns in 1986 when they were doing changes for taxes. Edmond Bessari is this gentleman on the right. You, of course, recognize Ronald Reagan. Edmond Bessari is, I was his right-hand man for 8 years. I was in my 20s. I was very young, worked with him. So this is not something like I fantasized. It is proven, it works. It's done with attorneys. So call us to discuss your personal situation and what your goals are. And the number is 844-720-1031. 720-1031. And asset protection gives you a lot of, you can go to the website and set it up, but actually call us so we can get you through it. And just to give you the breakdown, to form the LLC is $1,500. Usually these are the usual prices. I told you you're getting a discount, so don't freak out. Email a customized corporate minute book, and all this is $500. Create a specialized operating agreement. That's the most important part. That's $3,500. Sending, I mean, you can go to an outside attorney if they charge you less than this. I'd love to know. Shoot us an email. I mean, the ownership certificates, the agent setup, and all this is at least $250, and all this, which we include all in the renewal. $350, you get the renewal, you get the agent, you get all that every year, once a year. We include the first year anyway, and you get support by email. You email us, I respond right away. And the living trust is usually $1,000. The whole thing is about $10,000. And as I told you, $4,995. You're saving over $5,000. We include everything. We include the first lien. Every additional lien is usually $695. So if you say, I just bought a new property, $695. We draft a lien for that state. We send it to you to record it, and you're done. You're set up. It's one fee for, you own the property for 10 years. You're done. And additional bonuses, those who will actually contact us today to get started, I will include the first lien for free, and each additional lien, instead of the $695, we'll do it at $595. Really unlimited. If you have, like this gentleman who had 16 subways and wanted a lien for each, of course, we did it at the lower price, at 100 less. 844-720-1031. You can email Ashley, ASHLEE, not EY, EE at CMREI.com, Sharif Merawar Real Estate Investing.com, Ashley at CMREI. So I'll take a couple more questions. Any other questions? And we'll include the living trust for free, by the way, I said.
Yes, okay. We do. And the next question is, why is the Wyoming LLC protected against lawsuits? You're the owner of the LLC, correct?
You're the owner of the Wyoming LLC is owned by the living trust. That's the suggested structure. So why is it protected? Because the code in Wyoming says for LLCs, we're going to give a charging order protection. That's how they set it up. They're the original, the state of Wyoming were the original people that set up limited liability companies, created the rules for it. So they will uphold the law, and they will protect those who set up there, because it makes them a lot of money in renewal fees.
Perfect. Next question. We have 5 more questions. Would the living trust have to be irrevocable?
No, revocable is fine.
All right. You're going to love this question. Donald is asking, I was told by an attorney that equity stripping was illegal. This was Nevada, FYI.
Okay. So equity stripping is not making them money, the attorneys. It is illegal to do it as if it's a loan to your friend. But to capitalize an entity, that's the way to do it. Attorneys are not going to sell this. I can pretty much guarantee you they're going to discourage people, because there's no money for them in it. I mean, at $5,000, I mean, we have to pay the attorneys, we have to pay the filing, we have to pay to do all this. We make a little money. There's always a profit. I'm not going to do something that's not profitable. Otherwise, how will I continue doing stuff? But the key thing, attorneys, they want to pigeonhole you in what they sell and present. This is what we've done. This is the best, airtight, simplest, most powerful structure. You can go on the website, watch a 2-minute and 55-second video. Actually, I'm going to wrap up by showing that video, if you don't mind. And you will see the difference. It is not illegal. It's 100% legal. I am set up like this. We have hundreds of students set up like this. We've had students that got sued, and the lawsuit were dropped because of the structure. So that attorney is wrong.
All right, next question. Does the Wyoming structure protect you from IRS actions?
One more thing. If you don't believe me, go to the website and listen to Judge Landers from Circuit Court of California, from San Diego, and listen to Judge Lawson. These are judges that explain that this is the best setup. Okay, continue.
All right, or a few more. Does the Wyoming structure protect you from an IRS action such as a seizure or first position lien?
Well, if you owe money to the IRS, they're going to find ways to collect. So the IRS will have to sue. I don't know. We've really not had an IRS trying to go after somebody with a structure like this. I'm sorry, I don't know.
Next
I
question.
would presume if you owe money to the government, they're going to collect from future income coming to you. So
George is asking, what if I have a C corp?
yeah, no problem. We record the lien against the C corp. Whatever equity it has, it will be stripped. If it's a business, it will be a UCC1. If it's a real estate, it will be if it's going to be a mortgage deed, a lien.
All right, next question.
By the way, if you own art, we had somebody saying, I own a lot of art. This guy owns like photographs of Marilyn Monroe in black and white that were originals, very expensive. We put the art ownership into the Wyoming LLC. So continue.
All right, and this is the last question, and I think it's pretty good. So I'm a private money broker and have an LLC. I have a personal home, and my husband has a personal home in his name because we were separated temporarily. I have homestead on mine, but he does not. Do we need to have something set up separately, or can we combine it since we have a home in my name, a home in his name, and a LLC in my name?
Okay, so whoever is on the deed, whoever is on the ownership will be the one to sign the lien. If you're not together on the, so if the home is in your name, he probably, and in a community state, maybe he signed a quitclaim deed. You don't need his signature. You can strip the equity by yourself. He can strip the equity by himself. And if you're not getting along, I would not advise you to tell him much about your structures and what you're doing. So, so you will only need somebody's consent if they are on the deed, on the ownership with you. If not, you can do whatever you want. And that's why it works for prenuptial agreement. It works for people who own businesses by themselves. If they have a partner, they will need the partner to sign. Okay.
All right, that's it. Good job.
Very good. Thank you very much, Judge Lawson. Thing. Okay, so let me, if I may, is it okay, Alexa, if I can play like a quick video?
Absolutely. If everyone stays on for just a minute.
Okay. Thank you. I'm just trying to find my little video here. Let's see. It wraps up what I said because I know it's a lot of info. Let's see. It's right here. Do you see my screen?
Perfect.
I'm gonna try to put here. Okay.
Steve has a nice home, 2 rental properties in different states, and owns a small business. He wants to protect his assets from any potential lawsuits and losses. So he calls a company called Kiss My Assets Goodbye, KMAGB. KMAGB's team sets him up with the ultimate asset protection structure within 72 hours and gives him peace of mind forever. This is how it works. 1. We set up an LLC in Wyoming for Steve with a separate tax ID and an online bank account. 2. We draft a powerful LLC operating agreement with special clauses for business and legal reasons. 3. Instead of placing cash to capitalize the LLC, we pledge the equity of the assets by drafting some specially worded promissory notes equal to the amount of equity he has in each asset. 4. We then prepare separate mortgage liens and record them against each property. A separate UCC1 gets filed against his business. 5. With each lien recorded against each asset, there is no equity showing for any litigant or for any of their hungry attorneys to go after. 6. Steve even transfers his personal cash and trading account under the LLC's name and places the LLC ownership under his living trust to avoid probate. 7. The Wyoming LLC protects Steve and his assets from any lawsuit charging orders based on Wyoming LLC Protection Act number 1729503. 8. If any litigant still sues Steve and wins, that litigant will not only be unable to enforce any charging order against Steve's LLC, but such litigant may also receive an IRS bill under Phantom Income Rules, Revenue Ruling 77137, for the amount awarded to him or her by the courts. 9. This fact makes KMAGB's structure the ultimate trifecta in lawsuit avoidance, asset protection, and asset preservation. Go to www.kmagb.com and email us for a confidential no-obligation risk assessment to show you how this ultimate asset protection structure has also zero impact on your taxes due to the disregarded entity status of the LLC as per IRS rules. This asset protection structure has proven to be the fastest and least expensive way to get set up, the most flexible way to operate, and finally, the least complicated way to cancel it, unwind it, or pass it on to your loved ones. Contact us now at www.kmagb.com, and soon you can tell any litigator, kiss my assets goodbye.
Okay, so hopefully I covered all the questions. I hope to hear from you soon. You can communicate with Ashley. Ashley, ASHLEE @cmrei.com. I think, Ashley, did you put in the chat here a link or something where they can reach you?
She put all the stuff in the chat box, and I will also, as you guys know, I always send my thank you email after the webinar, so look out for that. I'll include all the contact information, the links, more educational videos for you guys that Sharif made for you to break this stuff down. And of course, we did record this webinar. It will be posted to our YouTube channel within 48 hours. So anyone watching the recording, please, please, please let me know if you have any questions so I can send you over to Ashley. They are so awesome and willing to take your calls and emails and talk to you guys directly about your specific situation. As Sharif said, we all have different stuff going on. So the best thing you want to do is contact Ashley directly. So
Thank you, everyone. Have a great one. Take care. Bye-bye.
thank you so much, guys. Have a
Thank
great
you,
day.
Alexa.
Thank you, Sharif. Thank you,
Thank you.
Ashley.
Bye-bye.
Take care. Bye, guys. See you tomorrow.